Hi guys, Harry Otis here, professional trader for 20 years. Started my career way back in 2005 and still alive in 2026. Well, today's theme of the day is we are hovering at highs. This is today. Indecision candle at the highs after breaking out two new highs yesterday. Okay, today is Thursday, the 16th of April. And yes, guys, in case you didn't know, we're in UpX week, but that doesn't matter when you have fundamentals screaming, positioning. People cut short or abandoning their positions here are trying to buy back really, really quick. Okay, so we're having a big move and it's still there. However, I still favor caution. Okay, all of the extra longs that I bought here, I have already sold, and I am still looking for some kind of pullback. Now, it depends how strong we are. The pullback could be just very, very brief. Or it could be deeper. We can go down to 685 and even 673. That'll be a little bit too extreme, unless it's some kind of news-driven event, because we're hovering at highs because the market is discounting the war. Okay, and the war could always come back on again. You never know, but I think it's pretty much over at this point. At least the market thinks so. It's just shrugging it off. Okay, so before we continue and hovering at highs, and what I'm doing, guys, stay tuned to the end. I always give my positioning and my thoughts going forward, and a couple of trades that I'm looking to do, and stocks that I'm looking at. Okay, so first, let's talk about the technical picture of the S&P 500. Guys, we're at highs. What's there to talk about? It's bullish. The technical picture is bullish. We're at highs. We can bring in the moving averages if you want to go through that exercise, but we're above all moving averages. The 50 in red is turning back up, and the 200 is still upward sloping. There's nothing more to say. The technical picture is bullish. Okay, we always pair it with sentiment. If you're in greed index, CNN, greed now, second day of greed. Okay, we're getting to the extreme greed and the momentum. A lot of things, a lot of these sub indices has changed, and we were talking about the put call ratio was pretty much at neutral yesterday, and we said it was going to get to greed and extreme greed quickly because it's a 5-day average, and I'm pretty sure that a lot of puts were bought, and yes, this confirms it. Now we're getting really, it's not super low. It's not like it was down here in September of 2025 or October of 2025. But we are recycling back into the call buying. Okay. So second day of greed. Let's have it marinate here. Okay. But on Thursday, because today is Thursday, the 16th of April, we always get my favorite investor sentiment survey, the AAII investor sentiment survey. And look, we're still bearish. The bears are still hanging around, 42.8% bears, with the average is 31. Okay, now we're below average on the bulls, but basically the too many bears still. We have to get rid of these guys, and we're not even close to getting rid of these guys. It's going to take months. So that's why I'm generally bullish. We have the sentiment still negative, even though there's a shorter term sentiment, I guess. It's still greed. And I think we're getting stretched. So even though we're bullish, I'm still expecting some kind of pullback. We're getting very, very stretched. This is a huge move in like 2 weeks. I think somebody was telling me that this was like the biggest, 2-week move ever, to go to new highs. The other big moves like that in the past always happen during bear markets. After big crashes, you have a big 10% rebound. Here we had a 10% plus rebound, maybe 11. But we're at new highs. That's very, very rare. I think that must be a first time. Okay, I think that's pretty bullish. So far, the technical picture bullish, sentiment is still pretty bullish because a lot of bears have to still be killed, even though we're just starting to get into the greed. Okay, so that's it for that. However, today we did have, as always on Thursday, we have the macro data that is important to us, and this is the United States initial jobless claims. Basically anemic, 207,000, back down to what it was. Super low, guys. This is like nobody's filing for unemployment. It supports the fact that we've been saying it all along, even during this decline. The only thing going down during this war period was the price action. The fundamentals were always bullish. They never took a turn, and this just confirms it. Fundamentals are still bullish. We have all three legs of the stool bullish, okay? Technicals bullish, fundamentals bullish, sentiment is bullish because it's bearish. Okay, that's a green light for you to like go net long, which we are. Okay, so let's get to the big news of the day. We're hovering at highs. What does CNBC has to say? The Straits of Hormuz, traffic, whatever. Who cares? It's just the war. nothing really happening today. The market is digesting this warm move. Okay, so what I wanted to talk to you guys about is where my positioning is. Okay, because and what I'm looking at. Okay, going forward here. Okay, like I said before, I got rid of my extra longs that I bought here. Basically, mostly here and a little bit 2 days ago on what is it, Tuesday? Yeah. So I'm still riding my net longs that I had for the whole bull market. Okay. And I added some short exposure here, which I don't know. I might probably lose on that, but it doesn't matter. Okay. What do I see going forward? Of course, we look at the war thing first, the US oil. Okay. Oil came, look how oil is basically up 2% on speculation that the talks might not work out. I just think this is like a lot of air is coming out of the market and it's going to continue to come out. And as I said yesterday, I entered a short position here by selling some in the money call spreads, and I'm looking to do more. Okay, I need more of a push higher. I'm hoping that we get a push higher here, so we get like a head and shoulders type move on the technicals, and then the fundamental switch, like the war is over. So you get positive fundamentals, or negative for oil, but positive for the market, and then as this price action is higher, and then it goes back low. That's what I'm hoping would happen. We have a marriage of fundamentals and technicals going forward. But I just think going forward, the oil move is done, and we're going to, exhaust it down to the downside again. Okay, that's oil. So what am I looking at? Well, we mentioned the semiconductor index, right? And in a previous video, I also mentioned the Mag 7 stocks. Okay, if you looked at it, that was from a previous video. And I did this video here, I think over the weekend, when it was up here, okay, around this level, okay, and I was saying I'm bullish on Mag 7, but not all Mag 7 were created equal. I picked 3 stocks that I like. The first one is NVDA. So when we made it around here, NVIDIA is up again. This is a good trade. You probably already made the full from 90 to 200. I can't remember exactly the option spread that I did, but what I did is I bought a call spread. I think it was 90-200 or the 95-205 call spread. I bought it and I financed it by selling the 170 put. Okay, it was like a trade that was like flat or slightly a slight credit for the trader. Okay, so we picked up a slight credit on the trade, and now we're probably making, I don't know, $2, $3 on the put spread, because it's a $10 put spread and it's trading at 198. So at least $3 on the put spread. So that's pretty good. This trade is going good. NVIDIA was the number one, and of the Mag 7. And we also looked at Google. Those are the ones I prefer. Now Google back at highs. And what was the other one? I can't really remember. It was Amazon. Those were the top 3. And look, Amazon at the highs. Okay, and we said when it was around here that Amazon would probably go to highs. Okay, so we're still looking to re-enter these other 2 on some kind of pullback. And you can see the other Mag 7 like Microsoft still at lows, not doing, it bounced, but still not even close to the highs. So you want to stick to the winners. I like NVIDIA, Amazon, and Google. Okay, so those were the ones that we looked at on the Mag 7. And I'm looking at these 2 stocks. Tesla, we mentioned Tesla. This is the stock I'm looking to enter, okay? I like it. But look, it has earnings here on Wednesday, the 22nd, next week, okay? I'm looking to enter this the day before earnings, okay? Because I really want to sell some option premium. It's going to be very, very elevated. I don't want to do it right now. It's going to go against me, because as you get closer to the earnings date, the option premiums inflate, and I want to sell some premium, probably sell a put spread here, maybe some kind of strangle. We will discuss it later. The point is, I'm not going to enter this Tesla trade. I'm just looking at it right now. I'm entering it Wednesday or Tuesday of next week. Okay, that's what I'm looking at. Okay, the other one that I'm looking at is, yes, ServiceNow. All these SaaS companies are getting destroyed. Well, time to try to play the game. I think it's getting too destroyed. Why? Looking for a bounce. Okay, why do I see that? Because I see the price action in ServiceNow going down, and I see the technicals here up. Okay, this is what we call positive divergence. So I like this. I think maybe the selling might be getting exhausted. I don't expect it to go to new highs, but I expected maybe and look, the earnings have always beaten, okay, in the past, even while it was going down. So it's still sort of doing good, doing well. And the earnings might even beat this Wednesday, announcing the same as Tesla. Okay, and it's 96 cents. They're expecting 97 cents. Okay, so I will exactly, again, wait right before earnings and enter some kind of short premium trade. Okay, this might be done. Okay, you have to, size your trade accordingly. You have to follow all the rules, but we'll get to it. What I'm looking at is I like this service now as a rebound play because of the positive divergence, and I like Tesla because it's one of them, the Mag 7s that are doing well. Okay, not the best, not the top three, but I'm looking for a trade right before that. Okay, those are the two things that I'm looking at, and of course we mentioned oil. What I think of it, I think we eventually go down. Okay, and I am bullish the SPY. We are hovering at highs. Option expiry tomorrow. I don't know what's going to happen, but my view going forward for SPY is we correct a bit. We're getting a little bit too stretched, a little bit too many call buyers. Okay, everybody's tripping over themselves, guys. This V bottom, vicious for bears. No chance to come back. No chance to see it went right through levels. I mean, if we even bring up the moving averages, it ripped right over the 200 and the 50, and had no chance for you to slowly go up to the 50, sell here, go down before going up or anything. No, a knife through butter. This is very, very bullish and very bad for the bears. However, I think a lot of Johnny come latelys are coming in right now, and we're going to get some kind of pullback, which I will buy. All right, let's see what happens tomorrow. OPEX, who knows? Okay, crazy things could happen, but so far I'm liking this action. Later, guys.